Everybody is a dollar bull. Did you turn into a bear? Because certainly it had that herd mentality. You could almost sense there was going to be a turnaround for some reason. And is this a pivot for the longer term, or is this just a gut check?
Yeah, it does seem like it's become a bit more consensus, the thought process over the last couple of months. I mean, unlike in the first half of the year, there was a lot more debate about the strong dollar and would it ultimately fail. But we're reaching another point where people are arguing peak dollar, peak dollar, peak dollar, and it's about to turn. Personally, I think it's too early. Our view is that it's going to persist for a while yet. The underlying conditions for that change in the dollar's direction aren't there. But very topical. But again, I think what's also a function of it is because, as you said, inflation, we're thinking differently perhaps, but also positioning in the dollar is not very favorable at this point. Is
it because of this whole kind of dollar doom loop, right? That the stronger dollar is going to lead to slower global growth, and then there's going to be kind of this haven play back into the greenback. Is that just too strong, you think?
Well, I mean, my framework is not quite a doom loop. It's just that how the dollar typically performs when global growth is slowing. It's a very clear pattern, even going back into the 70s. It tends to do better. But then there's other factors that are supporting the dollar. I mean, we can talk about eventually the Fed pivoting, but those yields are still quite tasty. And that's another key driver. And then also the risk environment is still fairly fragile. I mean, perhaps it's rallying a little bit today, but you can't be very confident with the global backdrop that's not great.
I mean, with the yen, the thing I always wonder about is this actually a reflection of the economy rather than speculative plays here? Because the economy has not really been motoring along for 2 decades.
Well, I think, again, it's a combination of factors. Positioning against the yen is quite extreme. But, Japan went through essentially a terms of trade shock when we had the big move up in energy prices, and that's coinciding with, maximum policy divergence for major central banks versus the BOJ. So, it's easy to back out why the yen has weakened so much, but in many ways, it weakened a lot more than what people were expecting.
But that interest rate advantage that you see with dollar yen, it's different with euro dollar now, right? Given that we've seen more hawkish talk from the ECB. Would you buy into the euro now?
No. I'm still a believer.
An unequivocal answer for a change, Paul.
I'm very much of the view that this is a short-term squeeze and ultimately it'll fail again. Because it comes down to who can actually deliver on these rate increases. Now, the ECB, as you said, is talking very hawkishly, but will they be able to meet the market's expectations for rate hikes? And we would push back against that. Whereas the Fed, I think, yes, the pricing is more right than wrong.
And the chances of actually the euro area going into a deep recession are much, much higher than the US, given what's going on with energy, the war in Ukraine right now. And so I suppose that limits the movement that the euro can have. And I think the same thing applies to sterling, which is almost acting like a proxy.
Absolutely. And that's very much central to why we've been quite cautious on these currencies for quite a long time. And also, if you dig a little bit deeper, look at the underlying flows, it may be a little bit boring for some of the viewers, but if the balance of payments is actually not pretty for either one of those currencies.
What about commodities, though? I mean, some would suggest maybe we're in a super cycle, given what the situation in Ukraine, that energy prices are going to stay elevated for some time. Does that diminish the value of the dollar in any way?
I don't believe so, because in turn, if that's your view, that you believe that commodity prices are going to stay high or energy prices relatively high, that just means it's another bellwether of global growth being in a darker position. And in turn, that probably means that the dollar is still in a good place.
Can the PBOC do enough to kind of avoid that 7 scenario as people are starting to really price in?
Well, I think they've been pretty successful so far.
Yeah.
I think the speculation is just dampened down because people are reading the tea leaves that they want the exchange rate just be taking a breather. Now, there's still a lot of cyclical pressure against the currency, but to go against these big deviations in the fixing, it's not the right time. And I think, as I said, the market is reconsidering right now.
What is the thinking behind this, though? What are they doing exactly and why?
Well, we've seen it periodically, even earlier this year when it was back in April and going into early May, actually the fixing deviation was getting quite big. And I think it's just putting a little bit of a handbrake on the market's mood about not getting overly negative about the currency. And that's just coming through yet again. And I think as well, we're over the next couple of weeks, there's still a lot of concern about what's happening domestically on the economy. And it's just to try and pull the market in a little bit from getting too negative on the renminbi.
And I guess, does it kind of stamp out the speculation speculation that they're using a weaker currency to boost exports as well, or as some sort of policy lever?
Yeah, you're right. I mean, that topic always comes up, but I'm not a big believer of it, frankly, because how much would your currency actually have to weaken to really give that kickstart to exports? When the global trade cycle is very suppressed, it wouldn't be a very successful policy.
Yeah.
Tell us a little bit about the currencies which you expect to do better than others. I mean, you've got deficit nations and you've got surplus nations. It does really matter how your current account is.
Absolutely, and there's been huge changes in that landscape. Even in Asia, for instance, Korea, which is normally, in the past would have quite a strong current account or trade position, that's been deteriorating for quite some time, and it's left the currency more vulnerable. But I think when I kind of step out and I look at the broader emerging market complex, we're really not spoilt for choice about which currencies to like versus others. I mean, really, in Asia, coming back to here, it's the Singapore dollar. Perhaps there's a longer-term recovery story for the Thai baht, but there's really not a lot.
We've been talking to a lot of guests about FX reserves, which are dwindling. There was one bank that said, I think some of these economies maybe have 6 to 9 months before those things start to dwindle. How concerned should we be?
Again, I would not necessarily agree with that, because you can look at so-called import cover and it'll give you these type of, you only have this number of months left of FX reserves. But really, you need to look at a broader measure. And if you look at some of the other statistics, it actually says they got a very adequate amount of reserves. Like India really comes up in that nature. Reserve adequacy is very solid in that country.
But, like the Fed, they've got to balance what's going on with their economy. They don't want to just chase the Fed and find that their economy is in tatters as a result. And, I think that the Indonesian finance minister is hugely cognizant of this, and I think we can hear what he has to say.
We don't want to use excessive, in this case, policy instrument like interest rate that can kill the whole monetary recovery of the economy. But that is really up to the central bank to do that. And that's why they decide if this inflation is going to affect, the current inflation is going to affect the expectation of the inflation in a more permanent basis, then it is time for the central bank to act.
So Paul, that's the conundrum facing all these guys.
Well, absolutely. So it's about getting that balance right. But, it's a very difficult backdrop. It's not just about the Fed raising interest rates. As I said, it's a slower global growth environment. But they, whether it's Indonesia or other policymakers, they've got to be very careful about not pushing the envelope too far, because they're going to have bigger problems down the road. So I fully understand that. I think what a lot of central bankers are waiting for, particularly in the emerging world, is that the Fed will eventually say, we've done enough. And maybe give a little bit of a sigh of relief. But that's going to be some time yet. So
what else can central banks do? Do they just have to turn less supportive? Do they have to continue raising rates?
Well, I think for the most part, yeah, they're going to have to maintain a fairly tighter monetary policy stance that they would like. And bringing it back to exchange rates, maybe smoothing some of that volatility, deploying some of those FX reserves, and hopefully that will buy time and be enough.
Until we see a pivot from the Fed. All right.
But even then, there's no guarantee on that.
Paul, great to have you. Paul Mackel there, HSBC's head of global FX research.